Hi, good morning. Good to have you on ET Now as always. First, a word on the market, Ravi. Right now, of course, the big trigger is going to be coming in from Fed midweek. But other than that, I mean, it's a global rally in place, be it for US, be it for us. And for us, of course, the FIIs also now have made a comeback. How are you feeling about the market?
Yeah, good morning. I think there is a lot of skepticism, probably justifiably through the valuations. But valuations are a necessary condition, not a sufficient condition for the markets to correct. And I would say generalization that the entire market is expensive tends to miss out on a lot of nuances. There are pockets where there is overvaluation, and there are pockets where there is some opportunity present from the next 3 to 5 years. India is actually making itself stand apart from the rest of the world because it's totally driven by domestic flows. It's totally driven by much stronger fundamentals. Even as compared to US, the stage of the economic cycle we are in is very different. We just began our cycle 3 years back, while US has been in that cycle 14, 15 years in a row. US has also been a very concentrated rally in some magnificent seven stocks, while India has been a much more broad-based rally. So the fundamentals, the macros look pretty strong. So we can never rule out a correction. But where I differ from most of the other people is that I don't think we are on the verge of a crash or any kind of a crisis which is going to lead to capital destruction.
On the verge of a crash or a major chunk of capital disruption. Hi, Ravi. This is Anisha joining in the conversation. Before we get into the theme of energy transition, I just wanted to get a better sense on your view regarding financials. Within financials, would you be tilting more towards, let's say, private bank or housing finance companies, or would it be PSU banks? How are you stacked up?
Yeah, hi Anisha. I think first of all, let's understand the broad macro top-down view. Over there, I feel, the big NPA cycle is behind us. Now, all of us can agree to it that the asset quality is as pristine as it can be for the lenders. However, I think post 21, there was a rally from the undervalued stocks within the banking sector. Going forward, the cycle is going to take a turn for the better in terms of re-leveraging cycle starts for the economy. If you can see the last 3, 4 years, the corporate profitability has been fantastic, but at the same time, lending has not picked up commensurately. I feel now we are on the verge of that private sector capex cycle picking up, and that means the re-leveraging in the economy will start. In a scenario like that, where the credit is growing fast, it is going to be the leaders that are going to do well, which is the private sector banks. So the reversion to mean trade in the PSU banks, in my opinion, is pretty much done. They will manage to raise funds. They have to raise funds because they are all at around 15, 16x leverage, and they will have to bring that leverage down. So there will be some dilution over there. And that dilution naturally means that returns from here are going to be more tepid than they have been in the last couple of years. Private sector, on the other hand, is well capitalized, clean balance sheet, and have capital to grow as well going forward. Barring a couple of the larger banks where there are some transition related issues, the leadership transition related issues, I think as a group, as a cohort, private sector banks are likely to do well over the PSU sector going forward.
Interesting. Let's now then talk about energy transition, Ravi. We saw snippets of your book where you've talked about as to this is going to be the next giga trend and how you actually see, a huge scalable opportunity coming in. We all know that the end game is going to be a cleaner, greener world. But how is it that you think investors can cash in on this opportunity?
Thanks for that question. This is a huge dramatic change that we are undergoing. Since the time of industrialization, which probably started 250 years back, where it was all about mechanization and producing on mass scale all the goods. Going forward, this is the single biggest change that has happened in that since the industrialization, where the source of energy for this production is going to change. Now, in this particular the major trend, mega trend, everything is going to change. The way the power is produced, the way the power is transmitted, and the way the power is consumed. And there are new technologies on the horizon as well. So in the power generation side, there is going to be new sources like solar, wind, nuclear, biofuel. I think out of all the four technology, it will be the solar that will be the backbone of the entire energy transition, because solar is the cheapest form of energy that humankind has generated, probably since the time when we used to rub stones to produce energy. So this is going to be deployed at a mass scale. In fact, even the recent price crash that we have seen is actually an inflection point for major deployment of solar throughout the world. The change that is happening as compared to the world of fossil fuel towards the manufacturing and technology based energy generation is that there is a learning curve. You can actually improve the yields, you can actually reduce the cost of the power generated through these manufactured means, while what you can do on the fossil fuel side is very limited. You just keep digging for the resources until you reach a point where it becomes economically unviable to dig any further. So price increase is the only way. There is no learning curve over there. So that is the big change that is happening. Now, we as a country, we don't want to move from being held hostage by the oil producing nations to being held hostage by countries that are leading in the manufacturing technology of this new energy. So we have to give empower and give enough protection to the local entrepreneurs to develop the supply chain ourselves. So solar is going to be a big theme for the next few years for sure. I mean, when I say few years, I'm talking about at least 10 years, maybe 20 years. And these companies are going to change scale dramatically. And over here, we are not even counting for the fact that probably if tomorrow green hydrogen does become a big source of energy, then the backbone of green hydrogen is also going to be solar. That will add a lot to the solar demand. Solar is only one piece of it. Power transmission is another piece of it. The way the power is generated is that in solar and wind, it's only either during the day or during the night, or whenever the wind is blowing or the sun is shining. In also, the locations of power generation are very far off, and you need to draw the power back to the grid. There is a two-way communication. A house can be consuming power as well as generating power. The time taken to generate to put up a generation capacity is much shorter as compared to a coal plant, while the time taken to put up power transmission is very short. It's the same at 4-5 years. So all this is leading to power transmission and the grid efficiency becoming very crucial. So a lot of money is going to be spent in the next 5-7 years across the world in getting the grid up to the speed to accommodate for the renewable power that is going to become larger and larger portion of our energy mix. So it is like before we start selling cars, we have to pave the roads. If the roads are not there, there's no point selling the cars. The power transmission is also similar. First we have to lay down the wires and the grid before we can move to the renewable energy. And the third piece of it is the electrification of everything, from mobility to logistics to industrialization to production. Everything will be electrified, and that will give rise to a lot of energy efficient products and so and so forth. Or basically EV in the cars is also part of that thing. So it's a very broad based themes with new technologies on the horizon, like green hydrogen, battery storage, and it's a large trend that is going to stay in effect for 20-30 years, and we can move from bucket to bucket over that period and benefit from it.
Ravi, while the point is taken that, the world is now moving away from fossil fuel, looking at cleaner energy options, the problem has always been about energy storage, right? So is that the opportunity, or do you think that this is a very large pool wherein the opportunities lie outside storage solutions as well?
No, so that is not the only opportunity, but that will be a big game changer for sure. Right now, as I mentioned, in renewables, the problem is sun generates power only during the day or whenever there is sun outside, and wind generates probably mostly only during the night. And if you see the way the power market is behaving in the country right now, during the day, the power prices fall to virtually zero or sometimes even negative. But in the early mornings and in post the sunset, the power prices go through the roof. That is because we don't have enough power generation capacity at that point of time. So if we bring about that power, storage technology and it becomes commercially viable, then we will be able to normalize. Right now, the benefit of this cheap solar power is not available to us 24/7. That should become available. So battery storage is not the only opportunity out there, but it definitely is a big game changer in the entire renewable story.
We need to watch out for the storage as well. But Ravi, I just wanted to get a better sense. Do you think the technology and policy is now very steady? And I ask you that because you talked about the learning and the disruption, but some of these technologies are still evolving, and first mover is not going to be the advantage for everyone here, because it could be a disadvantage as well, because some of the policies we have seen earlier with respect to wind, etc., didn't take shape fully, and a lot of people had to burn their hands in that. Do you think the technology is now settled enough and the policies are settled enough for you to take a big bet for this entire theme?
So you are absolutely right. Not all of the technologies have matured. So from a listed market perspective, one should be betting on a particular theme when three conditions are achieved. One, technology maturity has been achieved. Two, economic maturity has been achieved. And third, you can see there is a mass adoption of the technology happening. When these three things come together, that is when a theme becomes investable. So from that perspective, solar has already crossed that inflection point, and it is an investable opportunity. But battery storage, we are not yet sure, right? Which chemistry will succeed, which technology will succeed, whether it will be lithium ion or whether it will be sodium ion. The economics are not yet in place. The financiers are not yet willing to fund an EV. So there are lots of ifs and buts over there. So it's a good thing to be tracking. But at this point of time, these themes are running more on fumes, and I would wait for some of the pieces to fall in place before you can say that now this theme is going to run and there is going to be mass adoption, and we can hope to benefit from it as a listed market investor. So if you see the technology curve, usually there is a lot of hype in the initial stages, then it goes through a valley of death where a lot of technologies get probably buried, and then starts the new maturity curve where a mass adoption happens. And I think once you understand where that particular technology is on that adoption curve, is you realize that, yeah, sure, there is a lot of hype around this technology, but it is not investable for me as a listed market investor.
Ravi, this let's say theme of solar, which you think is one of the best bets and one of the biggest changes as far as the energy transition is concerned, is a well-discovered theme, right? From Adani's, Ambani's to Tata's, everybody is laying the groundwork to be prepared for that. They're kind of setting up these giga factories for the backward integration as well. Do you still think this is an area which is underappreciated, or is still a big investable theme?
No, so it might have become popular in recent times, but that does not mean that the trend is about to get over. Just to give you a reference point in what happened in China, some of these companies in China. So first of all, this is not a winner takes all kind of an industry. There will be multiple big players that will be being born in this particular sector. In China, 10 years back in 2014-15, these companies were the size of 2-3 gigawatt. Today, they are in hundreds of gigawatts. So a 100x kind of a scale up in a 10-year time horizon has happened in China when the rest of the world was not even a market. Now, the entire world is opening up. Europe wants to put new energy. US wants to do it. Even Africa wants to do it. Now, there are certain markets which will be catered to by the Chinese, and India will not be able to compete. So most likely it will be Europe, Africa, those kind of markets Chinese will cater to. But there are certain markets like US where they strategically want to delineate or their supply chain away from China. And in that case, that's where the opportunity lies for Indian players. So with this kind of a huge scale up possible in a 10-year time horizon, it would be too early for us to say that the trend has become popular. And there are so many companies on the private side which are not yet listed. They will all come to the market in the next few years. The economics of this sector have just gotten very, very attractive. The prices have just gotten attractive. For a solar asset developer, Now just equity IRR, they can easily get 12 to 14% kind of an equity IRR. And if they lever on it, they can possibly get 18, 19% kind of IRR also. If that kind of favorable economics are there, then more and more solar plants will be installed, and that will give rise to the opportunity getting bigger and bigger. So I am not too concerned about the popularity, so to say, about the stocks in the stock market, but the trend has a long way to go and still strong legs.
Quite interesting. So Ravi, within solar then, and let's pick up each energy segment cohort one by one. Within solar, what's the opportunity?
So there are multiple parts to the entire value chain, right? I mean, first, most of the people in India obviously will start with module manufacturing, but then backward integrate into cell and all the way till ingots. Very few will get into polysilicon. The economics at each stage of the value chain is very, very different. Polysilicon is very, very capital intensive, while cell is very, very technology intensive, while module lends itself to high scalability. They are the ones who own the customer. So there are different economics for everybody in the value chain. Now then there are other ancillary services around it, whether it is EPC, there are O&M, operations and maintenance, cleaning services. There will be many, and there will be new applications that will be coming. The market itself is divided into utility level, rooftop level, solar pump, PM Kusum. There are so many different segmentation of the market, and there will be different applications that we'll see. Solar is also one of the most versatile technology. You can have a malleable panel as well, and you can have one on the top of your roof, top of your car, or even a small, maybe mobile phone will also start having a solar panel. So that is the kind of versatility that technology has, and new applications and new industries will emerge around it.
Okay, so we'll have to watch out for that, and mobile phones having solar cell, definitely something which is perhaps possible. But Ravi, apart from, let's say, pure generation, which is clear in terms of how solar is expected to be, do you think transmission is also going to go under a sea change? And I ask you that because in between the talks were that, the capex has perhaps peaked both at the center and the state level. But do you think now that is also expected to undergo a change, and again, that becomes an investable opportunity as well?
No, in fact, power transmission is more immediate opportunity, I strongly believe, for the reasons I enumerated earlier, that we need a better, bigger, smarter, and efficient grid as compared to the grids that we had when there was only thermal power. So with that, and the money needs to be spent in the next 10 years. If we don't do that, this entire energy transition will fail. So power transmission is more an immediate area where we need to spend. Now, the good part about it is that there is no major, nothing dramatic technological change that has happened in this space. So there are these few companies who can actually dominate this space. They have been here, survived, and they have the right to win. So maximum delta in the immediate future in terms of opportunity, and there are few players to capture that opportunity, which is what is reflecting in terms of the valuations for some of these companies.
Okay, point taken. That's the value which is emerging. In the meantime, just wanted to do a status check on the market as well, because we are less than 20 points away from that all-time high level. Of course, we have Mr. Sanjeev Bajaj talking about the overwhelming response that the company's IPO, that is Bajaj Housing Finance Limited, has got from investors. But Nifty right now just less than 30 points away from that record high level. And power, of course, is a big theme that we are watching out for. But Ravi, wanted to get a better sense from you. Do you think last leg of the rally was a lot driven by, let's say, some of the public sector units as well, the NTPCs and power grids of the world, and the fact that PFC, REC were the big lenders and they were also supporting the ecosystem. Do you think the next leg will belong to the private sector, or is it going to be a very good mix of public and private yet again?
First of all, I usually don't like to segregate the market in terms of what is owned by government and what is owned by private sector. However, what we do look at is which are the businesses that are likely to do well. Now, if some of these public sector enterprises also have a new age angle to it, whether they're catering to the new age businesses like new energy, or they are also financing some of these products new layouts that are happening, then for sure that's a new growth kicker that is coming in for a sector that was actually traditionally very lowly valued. But at the same time, if we go back just to the differentiation between the banks, public sector banks versus private sector banks, I don't think there is any major new growth trigger which the public sector banks have versus private sector banks. It is the re-leveraging of the economy which is the major trend, and from that perspective, I feel private sector will keep gaining. Already there is a stealth privatization that is happening in the bank space, but other spaces I would not like to generalize. For example, in defense, I think the defense PSUs are in a much stronger position, at least for the next 10 years, where they continue to be a monopoly in some of the products, and they are the lead system integrators. Usually the DRDO or the Ministry of Defense gives the order to them, so they will remain a nodal agency, and then of course the entire ecosystem behind them will develop of sub-assembly and component guys, and that is where the private sector will emerge. But the lead system integrator will most likely remain with the PSU for at least 10 years. Then we'll have to evaluate after that.
Interesting. Ravi, you've talked about energy transition being a 30-year investment opportunity. Given the kind of rotation which has happened in the market and will continue to be so, right? That's the nature of the beast. Would you say that it makes sense to have the largest allocation now in your portfolio to the energy transition theme as opposed to any other?
No, so I mean, that's a matter of choice, or that's a matter of your conviction in the theme. And we do have very, very high conviction. So we have a high percentage in the particular theme. But of course, you have to diversify and be present in at least 3-4 themes, because you don't want a particular regulation or some competitive dynamics to go against you, and that can end up ruining your entire portfolio. So from the perspective of being well diversified and ensuring that one event does not damage your portfolio, you should be spread across a few themes. But yes, at this point, juncture, our conviction level is highest in energy transition. But remember, energy transition is a very, very broad theme. We need to still identify a sector or a subsector that will be the beneficiary of that trend. And from the next 5 years perspective, again, there are technologies which are still not reached that inflection point in terms of either cost or technology. So we will wait until that materializes and then place our bets.
Highest conviction for you is on energy transition, but of course people need to do their own sense check in terms of the diversification and the risk reward that they're looking at. But talking about the overall broadening of the theme, we are going to broaden the scope of this discussion as well. And in the interim, Ravi, hold your thought. My colleague is right there at the ground of Bajaj Housing Finance Limited listing, as well as the fact that Mr. Sanjeev Bajaj is talking right now. Let me take it across to Ankur to get a mood check there. Ankur, it's going to be a big one. You of course have Mr. Sanjeev Bajaj talking about the value they're trying to bring in for all the stakeholders. But talk to us about what's happening on the ground and what exactly is the mood check.
Yes, in a few minutes from now, Bajaj Housing Finance will list on exchanges. You can see from the other camera feed that Ashish Chauhan is speaking right now. And a few minutes before, Sanjeev Bajaj did spoke about the bumper response which the IPO has got, and also private consumption, which is a good sign for economy and in turn for Bajaj Housing Finance. He also spoke about meeting the financial needs of every Indian and also the growth trajectory of Bajaj Housing Finance. If you talk about the financials of the company, in FY24 itself, the net profit was up 38% to around 1,700 crore, and the company is confident of maintaining this kind of financial growth, is confident of maintaining the margins. As far as the listing is concerned, this was part of mandatory listing because it is in upper layer NBFC, and as per Reserve Bank of India norms, the company was supposed to get listed in FY25, but it chose to list in FY24 itself. So in a few minutes from now, the company will be a listed entity.
company will be a listed entity. We'll have one more, Bajaj Group company listed on the bourses. But Ravi, I know you don't like speaking stock specific, but just to get a better sense from you, the valuation of the housing finance sector, because I'm trying to broaden the theme for you here. If, Bajaj Housing Finance does list at a premium of around 80 to 120% what the street was talking about, the valuation will be almost 5 times book. Would you be willing to pay a price for a housing finance company which is 5-time book?
No, I think you're absolutely right. In the short run, market would be ending up factoring in a lot of the positives, and it will be difficult to justify these kind of valuation, and earning returns from them over a longer term period becomes difficult. However, there are technical reasons why this overvaluation is happening. With HDFC Limited becoming part of the HDFC fold, there is actually no large mortgage lender separately listed. So that will mean this stock will become a must own for most of the funds, and it will become part of most of the indices, starting at a 1 lakh crore plus kind of a market cap. It will become part of the large cap indices, and it will all the foreign funds will also look to buy into that. So from that perspective, I can understand why it is happening, but at the same time, I mean it becomes very difficult to generate outsized returns from these valuations going forward.
Interesting. Okay, Ravi, great to have you on the show today. Thank you so much. So much insight, not just on energy transition, but the rest of the market as well. Good speaking with you.
Thank you.